everybody. This is Tony Nash with Complete Intelligence. Thanks for joining us for another quick hit. Today, I am with Samir Madani of Tanker Trackers. We're really lucky to have him today. Samir, thanks so much for joining us. Can you tell us a little bit about what Tanker Tracker is?
Hi, Tony. Thank you for welcoming to your show. Tankertrackers.com is a service I started with a couple of friends around 4 years ago. And what we do is we track tankers that carry crude oil and gas condensates. So we try to give the mums and pups of this world a heads up on what's happening in the oil flow situation. So you have a lot of oil that's moving about, and you want to know how much oil is going to be delivered to the U.S., for instance, or how much has been picked up from Saudi Arabia, and so on. So we're doing those tracking reports. We're doing the tracking daily, and we're reporting weekly, and we even send out an SMS to our subscribers. The service is only around $50 a month or $500 a year. And what we do is we also track vessels that are in the digital darkness. So they basically switch off their AIS transponders, which are their GPS locators, and we track them with satellite imagery and so on to make sure that we have every vessel accounted for in the oil market, because the oil market is very opaque, and we try to bring more transparency to it so that people have a good understanding of what's going on.
Right. So, I love how you'll show those tanker-to-tanker transfers in the middle of the ocean. I mean, there's so many cool things that you do in your feed. And I really love how you guys do that. And you show how some of this trade happens and how some of the circumvention of agreements and that sort of stuff happens.
Yeah. Yeah, it's very interesting because, we follow a black and white media narrative of the world where it's either this or it's that. But everything that we see is right here in the middle. It's the gray area. And we try to shine a spotlight on that to show that there's a reason why there's war, which is what media shows you it's all oil related. The oil is the reason why there's so much war. But we actually see oil also being the reason for peace between two countries. So, for instance, Turkish vessels will deliver Kurdish oil to Israel, and we see that all the time. And that's just a constellation you wouldn't see in a regular conference room, but it's happening out at sea. So these are the fascinating aspects of what we work with. And I think it's better to have this kind of understanding of how the world works. Lift the hood and you can see the whole mechanics of it all. So I find it very fascinating, the research that we do. And we're constantly stumbling onto new things every week, I would say. Right. There's never a dull moment in oil.
Right. Well, one of the things I love about trade, and particularly trade in oil, is it is definitely an overlap of business and politics, right? You cannot have a pure play anywhere in trade, really, but especially in oil and gas trade. There's always political interest, there are always business interests, and you have to be aware of so many elements to really do the analysis well. So before we go on, I want to ask you a bunch more, but tell me about your hoodie. What is that?
The hashtag OOTT, which stands for the hashtag Organization of Oil Trading Tweeters. It's something that I started in 2016 in April together with Lisa Ward. And it's a wordplay on OPEC, the hashtag Organization of Petroleum Exporting Countries. So it's a community we started on Twitter in order to aggregate all the news flow of oil, all the views and the news into it, so that anyone who wants to follow it in real time on, let's say, TweetDeck, can just put in the hashtag OTT and you can see it in real time, especially when you have an OPEC conference in session.
Perfect. Okay, thanks for that. So what I want to really ask you about is, I find that especially crude oil and, say, trade have a lot to do with economic health globally, right? We've just gone through COVID. We've gone through a lot of government mandated closures, and there's been quite a lot of discussion about the rate at which economies are coming back. So right. You see this every day, right?
Yes.
You see the crude trade, you see international trade. How do things look from your perspective?
From our perspective, I can see that even from the list of the few countries that we actually track exports out of, because in this company of ours, we decided not to spread ourselves too thin globally. Instead, we decided to laser focus on the countries that make the headlines for even the long set of reasons, because they're the most interesting ones. You have Saudi Arabia, you have Iraq, you have Iran, and so on, the heavyweights of OPEC, and also the US. Now, what we've noticed is that since January to now, exports have slumped from, let me see, of the other countries except the USA, fell from 19 million barrels a day in exports to around under 14 million barrels a day. So, sorry, it was about 14 million barrels a day. So it's almost about 4.5 million barrels a day. It has dropped between January and now. That's a lot. So multiply that by 30, that's 120 million barrels a month, which is not being shipped out. Now, saying that, we see immense amount of barrels heading over to China because they are buying on the cheap. And we just posted 2 days ago, around 250 million barrels of oil headed towards China right now. And of that 250 million, half of it is already in their anchorage area. So they have over 100 million barrels that are just floating and waiting to get onto shore. And the reason for this is because there's a flooding in China, which of course slows down consumption of gasoline, but of course it picks up consumption of diesel for the heavy machines that got to move all the land and so on. So refinery runs worldwide right now are much lower than they were year on year because of the fact that gasoline consumption is down. So what I'm waiting for in the EIA reports is not how much inventory has been removed or added, but more the refinery runs, how much gasoline is being created out of crude processing. So I'm waiting for that 4-week moving average, because you shouldn't rely on the weekly number. You should go with a 4-week moving average. You should wait for that number to cross 15 million barrels per day. That's my threshold to say that the U.S. economy and the whole thing is coming back to roaring again. So because there's only a small window between 15 and 18 when it was around 17 and a half or 18 when it was actually at peak. So, but I'm very positive that we'll come across 15 probably in the new year for sure.
In the new year. So Q1, you think things are coming back?
Definitely.
Okay. Yeah. So we see Brent. Brent is in the mid 40s now. We see it. Both Brent and WCI, we see climbing slowly through the end of the year, and then our view is that pricing will tick up in Q1, and then we see it trailing off a little bit, later in the year. But we really do see a build through Q1, so it's good. Thank you for confirming what we're seeing.
Exactly.
So you're saying China's got 250 million barrels in anchorage, or in anchorage and in transit, right? So what's their storage capacity? Is there storage capacity in excess of that, or will this stuff stay in floating storage?
My understanding, when we did a survey, an actual manual survey, we went to storage farm after storage farm with satellite imagery, and we saw that, like, if you look at Google Earth and you try to find them, you'll actually see around, or this was 2 years ago, we saw around 250 to 300 million barrels more than what Google Earth had, because we had day fresh images from Planet Labs. And so we were able to go in and we saw that year on year, they have the ability to add around 250 million barrels of space, just free space, Okay. What was a drag and drop method with just a standard size storage tanks, 100,000 cubic meters, which is 628,000 barrels. So you just drop them in farms and you just, you see just months, a whole new farm will pop up.
Wow. Okay.
So it's incredible. So now that the fact that the consumption is down, there's no real pressure for them to actually do anything more. But we saw it was around 1.4 billion barrels of space and 1.1 billion barrels of occupancy.
Okay.
That was 2 years ago.
2 years ago. Okay. It just seems like there's so much supply, right? And burning off that supply is still a challenge. And we spoke with somebody from the Panama Canal about a month ago, and she was talking about how LNG was redirected from, say, the US to China to, say, Europe or something. And are you still seeing redirection of shipments, or are we back to almost kind of normal trade patterns?
No,
Not
I don't see
patterns.
Right. In crude, we actually see a dog-eat-dog situation going on right now. For instance, Venezuela's exports are down. It's a toilet flush. No kidding, Tony. It went down to 250,000 barrels a day now in our latest report. And we are using visual confirmation. And I've never seen a number that low out of Venezuela. But here we are, we're under 300,000 for sure. I mean, for the average this year, it was around over 500,000 barrels a day. But now, lately, what happened is it just completely plummeted. And so a lot of their exports are going just to other countries so that they can bring in gasoline in exchange. It's a barter. But what happens is, because they are shipping heavy sour crude oil, somebody else is going to eat their lunch. So China wants to import that. India wants to import that. A lot of other countries in the Far East, they need heavy sour because they need the asphalt, they need the diesel. Why? Because they're expanding their infrastructure, right? Mm-hmm. So what happened is that Iran started sending off a lot of the heavy sour lately. Mm-hmm. So I noticed a lot of barrels heading out over that way. They're getting assistance from other fleets from outside the country. So the Chinese refiners and so on, they are dispatching vessels to pick up the oil. So it's not just the national Iranian tanker company that's delivering the oil.
Fantastic. It's so interesting. Sam, I'm really interested in the Iran-China trade lane, and you cover that a lot. Yeah. And with, say, the circumvention of different agreements and embargoes, this sort of thing, I see a lot of coverage of that. Do you see a growing dependence on Iranian oil out of China, or does that seem to be declining? Do you see a diversity of suppliers? Of course, China's never had a single supplier, right? But do you see a growing number of suppliers and a growing dependence, say, on Iranian crude, or is it the other way around? Is Iran becoming increasingly dependent on China as an export market?
I would say it's the latter, that Iran is growing more dependent on China. Because they are, they've had 4 decades to prepare their whole plan B for sanctions and so on. They've really, polished it up. They've smoothed out all the rough edges when it comes to sanctions. So they know what they're doing. But now when I see how many barrels are leaving the country, and I look at the ratios of where it's being sent, they do send a lot to Syria, but it's no more than usually around 100,000 barrels a day. Once in March, I saw over 250,000 barrels a day. And that was because they had so much production going on in Iran and so little storage space, they had to get rid of it. Wow. And that's why it's shipping a lot. So the current media narrative is that they're exporting, somewhere between 70 and 200,000 barrels a day. But that's because those trackers are only using AIS data, which is automatically picked up by systems. But what we do is the visual confirmation with satellite imagery, and we see around 3 to 5 times that.
Okay.
Somewhere between 600,000 and 1 million barrels a day. That's a lot, 30 million barrels a month. And so they have to get rid of these barrels, because if they don't, what will happen is their production will have to drop even more to a point where they can't revive those mature oil wells.
Right.
That happens. It's very costly to kick them back into action once sanctions do get lifted and there's buyers buying. So what they do is they consume a lot domestically. They make it very cheap, and because they got to get rid of it. They store as much as they can. If they run out of storage space on land, they put it on a vessel, and they put it on many vessels. But now I've seen that the floating storage has dropped, so it's shipped out a lot. And so China is the big buyer, and there's so many ways to deliver to China. You can either go straight, or you can meet your another vessel halfway in the Strait of Malacca, and so they do a ship-to-ship transfer. Those are the ones that we usually look for. Okay. So, Iran is more dependent on China than vice versa. And China does report their barrels as coming in from wherever the last port call was. So it'll be Malaysia, it'll be Indonesia, someplace in between, right? So it's not coming in as Iranian anymore. Right. Also, the latest monthly report, they had to show something because it's obviously direct.
Okay. One last question, and I know we're running a little bit long, but you mentioned floating storage and the VLCC
Right.
market, and it's gone from $250,000 a day back in April to like $6,000 a day now, right? What happened there, and why has that price just collapsed?
It just deflated so rapidly. I mean, that thing was much more volatile than Bitcoin back in 2017.
Right, right.
So, I mean, I think the first thing you had was the sanctions scare, the Dalian Tanker Fleet back, it's almost a year ago or so. And so the Dalian Tanker Fleet was a large fleet of VLCC supertankers, 2 million barrels apiece, and about 40 of them. So that created a scare hype in the market that there'll be a shortage of vessels which were allowed to go to certain ports, or most ports. Now, what happened was that the U.S. They used that as a means to improve the negotiation when it comes to the phase one trade deal. Sorry. And so then they implemented, how you say, they kind of loosened up on those sanctions, waivers. Sorry, they put in waivers, and then eventually that was a non-issue. And then came the whole floating storage situation as a result of COVID, and then that spiked the price again. Now after that, it has come down quite a lot. So the vessels were moving a lot of oil back in Q2, and then it just quickly plummeted because Saudi just went from over 9 million or 10 million barrels a day down to 6, and even under. So that killed off the demand for more tanks. So we saw occupancy of VLCCs go from 50+% down to early 40s. And there's 802 operating VLCCs worldwide. And then there's 600 and something Suezmaxes and 1,053 Aframaxes. So all in all, it's a lot of barrel space out there available still today. So obviously the prices have dropped.
Fantastic. Okay, Sam, thank you so much. This has been so informative. I think we can go on for another half an hour. I really enjoyed this. So let's do it again in a few months. I'd love to see where we are in a few months' time, especially say after the U.S. election. I think things may change a little bit in the markets by that time. So I'd love to maybe end of the year, early next year, catch up again. Okay, Samir Madani, thanks so much for your time. I really do appreciate it.
Thanks for having me, Tony.
All right.
Cheers.
Cheers.
Bye.